Hello everyone, welcome back to our channel. So today we will be discussing your grade 10 lesson 3, which is business organizations. So in this video I will be discussing part 1 of this lesson and the part 2 will be covered in another video. So without further ado, let's get started. Okay, so in this lesson we are covering three main parts: the basic information on the type of business organizations, selecting an appropriate business organization, and the registration of a sole proprietorship. Okay, first we'll discuss about the basic information on the type of business organizations. So if we consider a country, when the population of a country increases, the needs and wants of the people are also increasing. They are expanding. So these needs and wants are fulfilled through business organizations. There are different business organizations which have been established to satisfy different needs and wants. So in order to cater these varying needs and wants, the business organizations need to expand their manufacturing, their distributing, likewise all the processes need to be expanded. So what is a business organization? A business organization generally consists of an individual or a group of individuals working together to produce goods and services required to fulfill human needs and wants. So, a business organization has been established either by a particular individual or maybe a group of or a set of individuals, and they are working towards a common objective. They are working to achieve a common goal, and they produce different goods and services to satisfy human needs and wants. So that is the simple definition of a business organization. I hope you understood. And these business organizations we can classify based on different types of criteria. So basically we are discussing about three criteria based on the ownership, based on the objective, and based on the scale. So we will be discussing these criteria one by one. Now we'll discuss about the classification of business organizations based on the ownership. So if we consider a business, there are different parties who are providing funds to the business. So these parties we call them as owners. The owners could be either an individual or a group of individuals. So when they are providing the funds, they are assuming the risk which are associated with their business. So these owners or the people who provide funds, they could either get profits from the business, or sometimes they will have to bear the losses as well. So based on the ownership, business organizations are mainly categorized as private sector business organizations and public sector business organizations. So first we'll see about the private sector organizations. Businesses which are owned by an individual or a group of individuals are known as private sector businesses. So these includes sole proprietorships, partnerships, incorporated companies, cooperative societies, and there are some other associations. And what are public sector organizations? The businesses which are funded and owned by the government are public sector business organizations. The organizations for which the funds are provided by the government and which are owned by the government, we call them as public sector organizations. So the examples are the state departments, state corporations, state companies, like that. So these are the private sector and public sector business organizations. We will be discussing each and every business organizations in the upcoming slides. Next, we'll see the classification of business organizations based on the objectives. So, the business organizations are established to achieve different types of objectives. So, we have discussed about these business objectives in the previous videos as well. Based on the objectives, business organizations are mainly classified as for-profit business organizations and not-for-profit business organizations. So what are for-profit business organizations? The business organizations whose main objective is to earn profits. We call them as for-profit business organizations, or else we call them as profit-oriented businesses. So these for-profit businesses, they are operated in both private sector and public sector. So private sector business examples are sole proprietorship, partnerships and incorporated companies. Public sector for-profit businesses are state companies. And next, not-for-profit business organizations. These are the business organizations whose main objective is to ensure the welfare of the members of the organization as well as to ensure the social welfare. So these businesses also conducted at private sector as well as in public sector. So private sector examples are the cooperative societies and the other associations. Public sector examples include the state corporations and the departments. Okay, now we'll see the classification of business organizations based on the scale. So you may have heard this term before as well. The scale of a business may be depending, or the scale of a business is determined by different types of criteria. For example, you can take the amount of capital invested by a business, or based on the number of employees working in a business, or sometimes the market share of the business determine its scale, and even the amount of energy use can be considered as a criteria to determine the scale of a business. So accordingly, based on the scale of a business, they can be categorized as small and medium scale businesses and large scale businesses. So what are small and medium scale businesses? Like, there are different criteria used to classify these small and medium scale businesses. As I have explained earlier, the amount of capital, if they have a small amount of capital, and if they have a small number of employees, and if we consider the market share, if it is relatively smaller than the other large businesses. So based on these criteria, we categorize them as small and medium scale businesses. So for example, the Department of Census and Statistics states that the businesses who employ less than 25 people are small scale businesses. That is a one type of categorization we use to determine small scale and medium businesses. So for example, if we take a small boutique shop in a village, it is a small scale business. There are several wholesale shops, but they are not employing large number of people. They may not be having a large number of capital. So we call them as small and medium scale businesses. So what are large scale businesses? So similar to the small and medium scale businesses, there are different criteria that determine large scale businesses. For example, these businesses may have invested a large amount of capital and they may be having employed a large number of people and they may be having relatively a larger market share. So based on these factors, we categorize them as large scale businesses. For example, if we take a garment factory, there are hundreds of thousands of workers employed and a lot of capital has been invested in these businesses. And of course, if we take examples like John Keel's, the Dialogue Asiata, these companies are considered as large scale businesses. So with this, I hope you got a better understanding about this classification as well. So up to now, we have discussed the main three classifications of the business organizations, which are based on the ownership, based on the objective, and based on the scale. Okay, now we will be discussing business organization types one by one. There are 7 types of business organizations: sole proprietorship, partnership, incorporated companies, cooperative societies, associations, state corporations, and departments. Okay, first we'll discuss about sole proprietorship. These are the businesses which are owned by a single individual. So there is only one owner for these businesses. So this is considered as the most common type of business which can be seen in almost all the countries of the world. So people have tended more toward these sole proprietorships because they are easy to establish and they do not require much capital. Also, because there is only one owner, they can take independent decisions. So the success of these businesses entirely depends on the commitment, the dedication, the skills, the knowledge, and the capability of the owner. So if we take a sole proprietorship, there are several characteristics of it. So the first one is capital is provided by a single person who is the owner. So as there is only one owner in this business, he is the person who is providing the capital necessary for this business. His individual contribution. He could either use his savings as the funds for this business or he could borrow from someone and invest in his business. And the second one is profits or losses to be borne alone. So this one means there is only one owner. So if his business earns profit, he can have those profits entirely to himself. And if there are any losses, the owner should bear all the losses alone. So that is the meaning of that. And the third characteristic is unlimited liability of the owner. So in sole proprietorship, the owner's liability is stated to be unlimited. That means if there are any liabilities he need to settle in the business, that liability is not only limited to his capital, but sometimes he has to use his personal assets, his personal properties to settle these liabilities. So that is the meaning of unlimited liability. The fourth one is no legal personality. That means these sole proprietorship, they are not mandatory to register, right? So because of that, a sole proprietorship does not have the ability to conduct any legal actions using its business name. So that means when a sole proprietorship business is entering into contracts, and when they are purchasing, and when they are getting bank loans, and if they are filing a case against someone, they can't use their business names, but they need to use the name of the owner in the legal operations. So that is what meant by no legal personality. The fifth characteristic is no continued existence. That means this business is owned by only one person. Suppose the owner of the business dies. So what happened? Or he become mentally incapable, like that. So these reasons may cause the business to collapse because there are no any other party involved with the business. So there is no continued existence for sole proprietorships. Another characteristic is not mandatory to register. So usually, in generally, we say these sole proprietorships are not mandatory to register, because usually people are conducting their businesses using their own names. For example, if we take a person's name is Saman, he may be conducting his business as Saman Stores. So he do not need to register this business. But suppose this person Saman, he is conducting his business as Smart Choice. So then his name and the business name are different. So if he is operating or if he is conducting his business in a name which is different to his name, and then he is required to register his business. So if not, these sole proprietorships are not mandatory to register. So these are the main characteristics of a sole proprietorship. So in addition to these characteristics, there are several other characteristics, like the owner has the ability to take the decisions alone because he is the only one person involved in the business, and the controlling is done by the owner. The owner has the authority to do all the activities of the business. He has the ability to control all the activities. And also, the owner has the opportunity to discontinue the business at any time he requires. If the owner thinks that I can't continue this business any further, he has the opportunity to discontinue at any time because it is his business. So these are the characteristics of a sole proprietorship. I hope you got a better understanding. Now let's look at the advantages of sole proprietorship businesses. The first one is convenient to start. That means these sole proprietorship businesses, they have minimum legal requirements and they require a small amount of capital to establish compared to the other business organizations. So because of that, we say that the commencing of a sole proprietorship is very easy and convenient. And the second one is all the profits belong to the owner, because these organizations are owned by a single individual. So he has the opportunity to get all the profits earned by a business. The third one is privacy of the business information is secure. That means in a sole proprietorship, all the controlling, all the management activities, administration, all the financial activities, and all the activities and operations are done by the owner. So because of that, there is a less tendency that the business information could go to the hand of a third party. So the privacy of the business information will be secure. And the fourth one is ability to use own skills at the best. That means in a sole proprietorship, the owner is the person who is taking all the decisions. So the business success depends on the owner's capabilities. So owner has the ability to take independent decisions. He has the ability to use his own skills at his best so that he could grow his business compared to the other businesses. And the final one is independent decision making. So with there being only one owner, he can take decisions quickly and he can take the most important decisions about the business. So that is also an advantage of sole proprietorship business. Now we'll see the disadvantages of sole proprietorship compared to other business organizations. The first one is unlimited liability of the owner. As I have explained earlier, if there are any debts or liabilities the owner has to settle in the business, the sole proprietorship owner has the unlimited liability where he need to use his personal properties or personal assets to settle the debts in the business. So it is a major disadvantage of sole proprietorship. Another one is difficulty in raising capital. That means in a sole proprietorship, the capital or the funds which are required for the business are done by or they are provided by only a single individual. So if we consider a single individual, his financial strength may be very limited. Also, if we consider a sole proprietorship, we can see there are many risks associated with the sole proprietorship, like with the unlimited liability. So sometimes the banks and external parties, they may be reluctant to provide loans and provide financial assistance to these organizations. So therefore it may cause difficulties to raise capital which is required to the organization or the business growth. Third one is no continuous existence. That means if the owner of the organization dies or if he is mentally incapable to practice the operations of the business will also collapse. The business will also die. Because of that, we say there is no continuous existence for sole proprietorship. Fourth one is no legal personality. That means, as I have explained earlier, all the legal actions of a sole proprietorship business has to be done by the name of the owner, not by the business name. So that is the meaning of no legal personality. That is also a disadvantage of this business type. And the final one is individual decisions of the owner can be unsuccessful. That means there is only one person who has the controlling ability, who takes the decision, who is overseeing the administrative activities like that. He is the person who is taking the decisions. But sometimes these decisions may not be successful. They may be wrong. So if these decisions are unsuccessful, they are affecting negatively to the success of the business. So that is also another disadvantage of sole proprietorship. So with that, I hope you got a better understanding about what is a sole proprietorship business, what are the characteristics of it, and what are the advantages and disadvantages of this business type compared to the other businesses. Now let's move on to discuss about partnership. What is a partnership? The relationship among persons conducting a business in common with an objective to earn profit is known as a partnership. So simply, a partnership is a relationship between different people and they have a common objective to earn profit. That is what we simply mean by a partnership. So, the Partnership Ordinance of 1890 affects to the activities of a partnership. So, if we take examples such as the professionals like accountants, lawyers, doctors, we can call them as partnerships. They are usually conducting their practices as a partnership. That means, for example, if we take accountants, there may be a set of chartered accountants who are carrying out an audit firm. So that audit firm, we call it as a partnership. Like that. If we consider a set of doctors carrying out a medical center, so that is a partnership. These professionals. So that is what we call as a partnership. So similar to sole proprietorships, there are special characteristics which can be seen in a partnerships. Now we'll see what are these characteristics. The first one is number of members in a partnership. So if we consider a partnership, according to the Companies Act number 7 of 2007, there is a minimum number of partners and a maximum number of partners should be there in a partnership. So accordingly, the minimum number is 2 while the maximum number of members is 20. So a partnership should be having 2 to 20 members in order to establish a partnership. And the second one is the partnership agreement. That means when a partnership is commences, it is established with an agreement between the partners. That agreement we call as the partnership agreement. So this agreement can be a written, oral or an implied agreement. It could be one from these three methods. All these three methods are valid. So, another rule applicable here is based on the Prevention of Fraud Ordinance. If the initial capital of a partnership is greater than 1000 rupees, this partnership is required to be conducted under a written agreement. So I said earlier, the agreement could be either written, oral or implied. But under this Prevention of Frauds Ordinance, it states that if their initial capital is greater than rupees 1000, they should have a written agreement. So this written agreement, we call it as the partnership deed. I hope you understood. And the third characteristic is the unlimited liability of the partners. Similar to the sole proprietorships, partnerships also have an unlimited liability. That means if there is any liability or a debt to be settled, the partners are liable to sacrifice even their private properties to settle these debts. So they have an unlimited liability. And the fourth one is not mandatory to register a partnership like the sole proprietorship. So we says if the partnership is conducted under the full names of all the partners, it do not require to register. But similar to the sole proprietorship, if the partnership is conducted using a different name other than the names of the partners, it should be registered. Not mandatory, but if they are using a different name than the names of the partners, they need to register it. And the fifth one is no separate legal identity. That means, similar to the sole proprietorship, if the partnership is required to do any legal activities, they cannot use their business name, but they have to use the partner's name or the personal names of the partners in their legal matters. And the final characteristic is no continued existence. That means if a partner dies or a partner being mentally unstable, he becomes mentally incapable, so the existence of the partnership will also collapse. So that states the characteristics of no continued existence. So moving on to the advantages of partnership businesses, the first one is convenient to commence. So same as sole proprietorship, the partnership businesses has less legal regulations. When they are initiating the business, when they are conducting the business operations, they have minimum legal regulations which they should adhere to. So compared to the other business types. Because of that, we say that partnerships are also convenient to commence. The second one is can raise more capital. If we consider a partnership, there are 2 or more members who are involved. So all these members can raise or provide more funds to this business when compared to a sole proprietorship. So this is another advantage. The third one is can utilize different skills of partners. That means in a partnership, there are different people involved. So these people have expertise, knowledge, and they have capability in different areas. They have different skills. So the partnership can use these different skills to get a better outcome in their organization. So it is another advantage. The fourth one is shared liability among partners. So in a partnership, if there are any losses or if there are any liability in their operations, it will be shared among all the partners in the business. So the liabilities and the losses has to be borne by all the partners, not by only one person. So it is an advantage. And the final one is can take collective decisions. So in sole proprietorship, we say that sometimes his or her decision may be unsuccessful. But in partnerships, we can take collective decisions. So they can discuss what could be the impact of a particular decision, and they can consider the pros and cons, and they can enter into more fruitful decisions. So these are the advantages of partnership businesses. I hope you got a better understanding. Okay, now let's discuss about the disadvantages of partnership businesses. The first one is unlimited liability. So the partners in a partnership, they have an unlimited liability with respect to the debts of the business. That means if there is any debt or a liability they need to settle in their partnership, they are not only liable up to their capital, but also they will even need to sacrifice their personal properties to settle this debt. So that is what you mean by unlimited liability. Second one is profit shared among partners. So in the advantages, we mentioned that losses are shared among the partners. So it is advantage. But the disadvantage is if you have any profit in your partnership, it is shared or it is divided among all the partners of the business. So it is a disadvantage. Third one is conflicts among partners. That means when there are several people involved in a business, all the people are involved in decision making as well. So when you are taking several decisions, there may be contrasting ideas. So it will lead to conflict among the partners. So if these conflicts continue, it will cause the business to fail. So this is a disadvantage. Fourth one is no continued existence. That means due to a death of a partner or due to the fact that a partner becomes mentally unstable or incapable, the partnership may be collapsed. The partnership may have to be dissolved. So, the partnerships do not have a continued existence. It is another disadvantage. The final one is no legal personality. That means in a partnership also, if you need to conduct any legal activities, you cannot use the partnership or the business name. You have to use the partner's personal names in the legal matters. That is what you mean by no legal personality. So I hope you understood this. Okay, so now let's discuss about incorporated companies. So what is an incorporated company? A firm which is registered under the Companies Act number 7 of 2007 with a legal personality can raise capital by issuing shares, and the liability of the shareholders being limited is an incorporated company. So this is the simplest definition of an incorporated company. They are registered under the Companies Act number 7 of 2007 and they have a legal personality and they raise their capital by issuing shares, and the shareholders has a limited liability. So the owners of a limited company are called as the shareholders. So they have a limited liability where their liability is limited to the amount they have paid or they have the liability to pay for the shares they have purchased. So that is the simple definition of incorporated companies and the simple explanation of what is the liability of shareholders. And now let's move on to the characteristics of incorporated companies. The first one is incorporation under the Companies Act. So, if we take a company, for an incorporated company to commence, they have to incorporate their company under this Companies Act number 7 of 2007. So, under this act, there are several relevant documents which has to be submitted by the company to the registrar of the companies. So, with the submission of these duly completed documents, they will be considered by the registrar of the companies as an incorporated company. There is a very long process for this, and we are not discussing these at your level, so we will be discussing these as simple as this. And the second characteristic is continued existence. That means a company is considered as separate from its owners. That means if we take any shareholder in the death or in the mental incapability of a shareholder, the company will not be considered as bankrupt or the company will not be dissolved. The death or the incapability of one particular shareholder will not affect to the existence of a company. So, an incorporated company has a continued existence. The third one is ability to register with limited liability. That means when compared to other businesses, the shareholders has a limited liability with respect to the debts and other liabilities of the company. That means if there are any debts or liabilities the company has to settle, the shareholders are only liable up to the value of the shares they purchase. Like they need not to sacrifice their personal properties like in sole proprietorships and partnerships. That is another characteristic. The final one is can raise capital by issuing shares. So, an incorporated company raises the capital required for its business operations by issuing shares to the public. So, that is the final characteristic of incorporated companies. I hope you got a good understanding. Okay, then let's look at the advantages of incorporated companies. The first one is can raise more capital. That means these incorporated companies, they raise capital through issuing shares. So, they can raise a high capital by this. That means they have a higher recognition. So, because of that, they can raise funds easily through the external parties as well. This is an advantage. Another one is receiving legal personality. So, unlike sole proprietorships and partnerships, a company is considered as a legal person before the law. That means a company can enter into the contracts and can acquire assets, can pay taxes in the name of the company, not in the name of the shareholders. It has a legal personality. Third one is continued existence. That means the existence of a company will not be disrupted in a death of a shareholder or due to the bankruptcy of a shareholder or due to the mental incapability. So, because of that we say a company can conduct their operations even in the above mentioned situations. They have a continued existence. Fourth one is limited liability. The shareholders of a company, they are not liable to provide or sacrifice their personal properties or personal assets to settle the debts of the company. They are only liable up to their value of their purchased shares. That is another advantage. The final one is managed by a board of directors. So, all the activities, all the business functions of the companies are managed by a board of directors. So, this board of directors is appointed by the shareholders of a company. It is also another advantage of incorporated companies. I hope you understood. So, next, moving on to the disadvantages of incorporated companies. The first one is greater level of legal provisions. That means if you are starting a company and when you are conducting the operations and even in the winding of the company, there are comparatively higher number of legal provisions compared to the other sole proprietorships and partnerships. So, the conducting and the initiation of a limited company is more complex compared to the other forms of businesses. And the second one is profits and ownership are shared. That means when we take an incorporated company, the ownership is done by the shareholders. There could be hundreds of shareholders. So if there is any profit, it is also shared among all these 100 shareholders. So the profit is also shared. It is another disadvantage. So apart from these major disadvantages, there are several other disadvantages of incorporated companies like difficult to dissolve and separate administration, and also the incorporated companies need to pay taxes. So these are the disadvantages of incorporated companies. I hope you understood. So with that, we have come to the end of part 1 of third lesson. In this video, we have covered the basic information on the type of business organizations, classification of business organizations, and 3 types of business organization, which are sole proprietorships, partnerships, and incorporated companies. The part 2 of this lesson will be covered in another video. So see you guys soon in our next video.